petrol pumps that have run dry in Sri Lanka, and a shorter work week in Pakistan to reduce energy and fuel consumption. Drastic measures are being taken in parts of Asia as the region battles an unprecedented energy crunch.
One of the largest energy producers, which is Russia, invaded Ukraine, and the widespread sanctions, meaning that the energy supplies from this country has been called into questions.
There's slightly different weather conditions, heat extremes in some places, cold extremes in others. But these extremes create extra demands for energy over and above normal times. And so we probably do have a little bit higher demand than normal, at least at the moment we can kind of foresee this. And then we can predict what levels of supply we need. We can contract the levels of supply in order to create the power, the heat, and so forth. But securing those supply chains at the moment is a slightly more difficult problem because we've had, double-digit percentages of supply taken off the market for key fuels like oil and gas.
That's led to a surge in oil and gas prices since the start of the year. And it's not just developing countries that have been impacted. Australia and Japan have urged people to cut power usage to avoid blackouts. While in Singapore, which relies on imported natural gas to generate about 95% of its electricity, tariffs will increase by more than 8%. The energy crunch will weigh on Asian economies already facing rising inflation rates and slowing growth.
Broadly speaking, energy is a big component within the CPI basket, for example. And that itself, right, with the higher energy costs, and that will put the upside pressure on the inflation. And then inflation itself is most directly, if you to see in your daily lives, right, is things that you spend on, they will get more expensive. We do see that the higher energy prices and the subsequent tighter monetary policy stance from many of the countries as a result of the dealing with reining in inflation itself is likely to negatively impact on growth in next year. So we are markedly seeing lower growth in 2023, not just for major economies, but also for the region here as well.
Governments are racing to find solutions to plug the short-term gap in energy supplies. Singapore has established standby facilities which generation companies can draw from when their own supplies are disrupted. The government has also introduced a new 1.5 billion Sing dollar package of support measures to help households and businesses tide over higher prices. Elsewhere, Indonesia is adding $24 billion to its budget for energy subsidies, while Malaysia is expected to spend a record $18 billion on subsidies this year to shield consumers. But experts warn that such moves may not be sustainable.
Singapore has the $1.5 billion package, but essentially when you look at the package itself, right, I think we are not trying to control prices, but rather to help households and companies cope with the rising costs. But in other countries itself, they implement things like subsidies on essential goods. They have like subsidies on fuel prices, and that itself has a distortionary effect. However, with many of the economies having experienced the drastic impact of COVID-19 pandemic in the last few years, right? So their fiscal position has already been compromised. And if we are looking at a prolonged inflation situation, so the fiscal burden will be increasingly precarious for them, right? If they keep on with a lot of these subsidy programs.
In the longer term, diversifying energy sources will also require government investment.
One of the more interesting new technologies in the near-ish term would be hydrogen and ammonia. And we're beginning to see price points for hydrogen supply chains which are looking commercially attractive. And so the change in market conditions that we're seeing recently because of the Ukraine crisis This will make it more attractive to invest in those types of newer technologies, which are looking like they're on the cusp of commercial viability, and a tiny bit of government intervention, maybe not very tiny, but certainly not significantly massive, but a little bit of government intervention may be all that's required to actually make these really viable technologies that can be brought into place in the nearer term. But the infrastructure considerations are always important for energy systems. Infrastructures can take decades to plan and build, and forward thinking is always necessary on that as well.
Opportunities for Japan, Korea, even China and India to take advantage of the high oil, gas, and even coal, particularly oil and gas prices, to develop renewable options. If limited by domestic resources, can develop in other countries, hydrogen and EVs.
Experts believe prices could have peaked, but it could be months before they stabilize.
Demand growth is steady, but supply is also coming around. You know, with OPEC is gradually restoring to their pre-COVID level of the quotas, and there is an opportunity that the Iran nuclear deal may be arrived at, and although not this year, but next year it will be maybe additional volumes from Iran and Venezuela, and back to the U.S. alone, you know, because of high prices, right, and other non-OPEC countries too, their production has been going up month by month. So you would imagine by the end of the year, they will be at the highest level compared to any time now, and they will continue from there. So that's where, you know, eventually, you know, the market will be more balanced.